Based on the historical data and forecast, Bitcoin shows a bullish trend with recent price fluctuations. The RSI is currently around 58.7, indicating slightly overbought conditions. However, the forecast suggests a continued upward trajectory, with prices expected to reach $111,100. Considering the Bollinger Bands, the price is nearing the upper band, suggesting a potential pullback is possible, but the overall trend remains positive. Therefore, I recommend a long position strategy with a focus on capitalizing on the bullish momentum while managing risk. My recommended strategy is to enter a long position at $108,700. Given the slightly overbought RSI and the proximity to the upper Bollinger Band, a conservative stop loss should be set at $107,700 to protect against a potential pullback. The target price should be set at $111,100, aligning with the forecast and allowing for a significant profit margin. This strategy combines the bullish forecast with technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Ethereum has shown volatility, with support at $2,410 and resistance at $2,510. The RSI indicates periods of oversold and overbought conditions. The Bollinger Bands suggest potential price fluctuations within a defined range. Considering these factors, I recommend a combined strategy utilizing RSI and Bollinger Bands for optimal returns. Initially, we'll employ a strategy based on RSI, targeting oversold conditions. When the RSI dips below 35, indicating an oversold state, we'll enter a long position at $2,220. The stop loss will be set at $2,180 to protect against further downside, and the initial target price will be $2,410, near the support level. Next, we'll incorporate the Bollinger Bands for enhanced precision. When the price touches the lower band, it signals a potential rebound. If the price reaches $2,460 on July 1, 2025, we'll move the stop loss to $2,440 and adjust the target price to $2,510, aligning with the resistance level. If the price continues to rise and touches the upper band, we'll take partial profits at $2,510 and move the stop loss to break even. This layered approach, combining RSI and Bollinger Bands, aims to maximize returns while minimizing risk, capitalizing on both momentum and volatility within the defined support and resistance range. Based on the historical data and forecast, XRP shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. However, several days show RSI values below 40, suggesting potential oversold opportunities. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. Considering these factors, a combined strategy leveraging RSI and Bollinger Bands will be implemented. We will look for opportunities when the price touches the lower Bollinger Band and the RSI is below 35, indicating a potential oversold condition. The strategy involves a long position when the price reaches the lower Bollinger Band, specifically around $2.02. The entry price will be $2.02. The stop loss will be set just below the lower Bollinger Band at $1.99 to mitigate potential losses if the price continues to decline. The target price will be set at $2.29, coinciding with the resistance level, aiming for a profit of $0.27. This strategy will be executed with a moderate position size, adjusting based on risk tolerance and market conditions. The forecast data suggests a price range between $2.17 and $2.21 for the next week, supporting the potential for reaching the target price. This combined approach offers a balanced strategy for capturing potential upside while managing risk effectively. Based on the historical data and forecast, BNB shows a slight upward trend with periods of consolidation. The RSI consistently remains below 60, indicating the asset is not overbought. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given the current RSI around 54.3 and the forecast predicting prices above $650, I recommend a long position. Entry price will be $652, with a stop loss set at $645, just above the established support level. The initial target price will be $657, aligning with the first day of the forecast. To maximize returns, I suggest a tiered target strategy. After reaching $657, move the stop loss to the entry price of $652 to protect profits. If the price continues to rise, the next target price will be $659, based on the forecast. Finally, if the price reaches $659, consider taking partial profits and moving the stop loss to $658 to secure gains. This approach balances risk and reward, capitalizing on the predicted upward momentum while safeguarding against potential reversals. Based on the historical data and forecast, Solana shows a volatile trend with a recent bounce from the support level of $131. The RSI consistently fluctuating around the 40 to 50 range indicates a neutral to slightly bullish momentum. Considering the forecast prices are trending upwards, starting at $147 and reaching $152, a long position appears favorable. The Bollinger Bands also support this view, with prices currently near the lower band, suggesting a potential rebound. Therefore, I recommend entering a long position at $147, setting a stop loss at $144 to mitigate potential losses if the price breaks down, and targeting a profit at $166, near the resistance level. To refine the strategy, we'll incorporate the RSI indicator. When the RSI falls below 30, it indicates an oversold condition, signaling a potential buying opportunity. Conversely, an RSI above 70 suggests an overbought condition, indicating a potential selling opportunity. Considering the current RSI around 44, we are not in an oversold territory. However, if the price drops to $147 and the RSI dips below 30, we can enter a long position with a stop loss at $144 and a target price of $152, aligning with the forecast. This combined approach, using both Bollinger Bands and RSI, provides a robust strategy for maximizing returns while managing risk. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuations within a defined range. The support price consistently remains around $0.274, while the resistance fluctuates between $0.278 and $0.284. The RSI values have been oscillating around 50, indicating neither overbought nor oversold conditions recently, but trending upwards. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper and lower bands. Given this analysis, I recommend a moderately bullish strategy focusing on short-term gains. Our strategy involves a long position with an entry price of $0.276. We will set a stop loss at $0.274, just below the consistent support level, to protect against unexpected downturns. The initial target price is $0.278, aligning with the resistance level. If the price reaches this target, we will consider a trailing stop loss at $0.277 to secure profits and potentially capture further gains if the upward trend continues. The forecast indicates a price movement towards $0.278 in the coming week, reinforcing the viability of this strategy. This approach balances risk management with the potential for achieving high returns within a defined timeframe. Based on the historical data and forecast, Dogecoin demonstrates a declining trend with consistent support at $0.16 and resistance at $0.17. The RSI consistently remains below 50, indicating a weakening momentum. The forecast predicts a continued downward trajectory, hovering around $0.162 to $0.165. Considering this, I recommend a short selling strategy. We will initiate a short position at $0.169, placing a stop-loss order at $0.174 to limit potential losses if the price unexpectedly reverses. The target price for this short position will be $0.154, aiming to capitalize on the anticipated downward movement. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trades near the lower band, reinforcing the bearish outlook. We'll use a combined approach, prioritizing the RSI signal for entry and stop loss, while using the Bollinger Bands to adjust our target price. If the price approaches the middle band, around $0.173, we will consider closing the position partially to secure profits. This combined strategy aims to maximize returns while mitigating risks, leveraging both momentum and volatility indicators for informed decision-making. Based on the historical data and forecast, Cardano exhibits a downtrend with significant volatility. The RSI consistently remains below the 50 mark, indicating a prevailing bearish sentiment. The forecast predicts a continuation of this downward trend, with prices hovering around $0.554 to $0.559. Considering these factors, I propose a short selling strategy with an entry price of $0.577. A stop loss should be set at $0.587, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.554, aligning with the established support level. To refine the strategy, I'll incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. However, given the current oversold conditions as indicated by the RSI, I will wait for a slight bounce before entering the position. If the price retraces to $0.567, which is near the upper Bollinger Band, and the RSI is still below 30, I will enter a short position. The stop loss will remain at $0.587, and the target price will be adjusted to $0.553. This combined RSI and Bollinger Bands approach aims to capitalize on short-term downward movements while mitigating risk with a well-defined stop loss. Based on the historical data and forecast, Bitcoin Cash exhibits an upward trend with consistent support at $465. The RSI consistently remains between 54 and 69, indicating a neutral to slightly overbought condition. The Bollinger Bands show that the price is approaching the upper band, suggesting a potential pullback or consolidation. Considering this, I recommend a long position with an entry price of $498. A stop loss should be set at $465 to protect against a potential downside reversal. The initial target price is $516, aligning with the forecast high and the upper Bollinger Band. To refine the strategy, I suggest incorporating RSI signals. If the RSI falls below 20, indicating an oversold condition, a long position can be initiated. Conversely, if the RSI reaches 80, suggesting an overbought condition, a short position should be considered. For the proposed long position at $498, a trailing stop loss can be implemented, moving up as the price increases, to secure profits. The final target price is $521, based on the forecast, offering a substantial return potential. This combined approach leverages both trend analysis and momentum indicators for enhanced risk management and profit maximization. Based on the historical data and forecast, Sui exhibits a downtrend with increased volatility. The RSI consistently remains below 50, often dipping into oversold territory, indicating potential buying opportunities. The Bollinger Bands show that the price has been fluctuating within a widening range, suggesting increased market uncertainty. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands for optimal returns. We will implement a buy strategy when the RSI falls below 30 and the price touches the bottom of the Bollinger Bands, aiming to capitalize on short-term price rebounds. The entry price for this trade will be $2.43, coinciding with the bottom of the Bollinger Bands and a low RSI reading. To manage risk, the stop loss will be set at $2.34, slightly below the recent low of the Bollinger Bands. The target price will be $2.78, aligning with the forecast price and a potential resistance level. This strategy aims to capture a short-term upward swing, capitalizing on the oversold condition and anticipating a bounce towards the forecasted price. The potential profit is significant, given the relatively small risk exposure. Based on the historical data and forecast, dYdX demonstrates a volatile trend with a recent recovery. The RSI consistently hovers around the 40 mark, indicating a slightly oversold condition, while the Bollinger Bands show price fluctuations within a defined range. The support price remains steady at $0.51, and the resistance is at $0.713. Considering the forecast for the next week, which anticipates a slight upward movement, I recommend a long position strategy. We will enter a long position at $0.497, placing a stop-loss order at $0.45 to mitigate potential losses if the price declines. The initial target price will be $0.537, aiming to capitalize on the anticipated short-term upward trend. To refine this strategy, we will incorporate the Bollinger Bands and RSI. If the price touches the bottom of the Bollinger Band, which is currently $0.429, we will enter a long position. The stop-loss will be set at $0.40, and the target price will be $0.53. If the RSI reaches an oversold level of 30, we will enter a long position at $0.437, with a stop-loss at $0.40 and a target price of $0.50. Combining these three strategies, the most efficient portfolio will be to enter a long position at $0.497 with a stop-loss at $0.45 and a target price of $0.537, which is the most promising opportunity given the current market conditions and forecast. Based on the historical data and forecast, Starknet demonstrates a downtrend with significant volatility. The RSI consistently fluctuates, spending time both in oversold and overbought territories, indicating a lack of strong directional momentum. However, the recent upward movement in RSI towards 51.1 suggests a potential shift in momentum. The Bollinger Bands show that the price is currently near the lower band, indicating a possible oversold condition. Considering these factors, I recommend a cautious long position strategy. The entry price will be $0.112, coinciding with a bounce from the lower Bollinger Band and a relatively oversold RSI of 39.8. The stop-loss should be set at $0.108, just below the recent low and the lower Bollinger Band, to limit potential losses. The initial target price is $0.123, aligning with the middle of the Bollinger Bands and a conservative resistance level. To optimize returns, I suggest a dynamic strategy adjusting the target price based on RSI and Bollinger Bands. If the RSI climbs above 60, indicating strengthening upward momentum, move the target price to $0.127, near the resistance level. Conversely, if the RSI falls below 40 and the price approaches the stop-loss, exit the position. The forecast data suggests a slight upward movement in the short term, further supporting a long position. This strategy balances risk and reward, capitalizing on potential short-term gains while protecting against significant losses. The portfolio will prioritize this long position, allocating 60% of the capital, with the remaining 40% held in cash for flexibility. Based on the historical data and forecast, Immutable exhibits a downtrend with recent signs of potential reversal. The RSI consistently remained below 30 for most of the period, indicating an oversold condition. The Bollinger Bands show that the price has been trading near the lower band, further confirming the downtrend. However, the recent RSI increase to 51.5 suggests weakening selling pressure. Considering the support price of $0.403 and the forecast, I propose a contrarian strategy focusing on potential upward movement. I recommend entering a long position at $0.406. The stop-loss should be set slightly below the support level at $0.398 to limit potential losses if the downtrend continues. The initial target price should be $0.469, aligning with the recent high. To refine the strategy, I will incorporate the Bollinger Bands. If the price breaks above the upper band, indicating a strong upward momentum, I will adjust the target price to $0.501, the resistance level. Conversely, if the price falls below the lower band and the RSI drops below 20, I will exit the position and reevaluate the market. This combined RSI and Bollinger Bands approach offers a dynamic risk-reward profile. The portfolio will allocate 60% of capital to this long position, 20% to cash for flexibility, and 20% to a short position on a correlated asset to hedge against broader market risks. Based on the historical data and forecast, KAITO shows a mixed trend with periods of consolidation and upward movement. The RSI consistently remains below 57, indicating that the asset is not overbought. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. Considering these factors, I propose a long-term strategy focused on capitalizing on potential upward momentum. I recommend entering a long position at $1.46, placing a stop loss at $1.36 to protect against downside risk, and setting a target price of $1.54. To refine this strategy, I will integrate RSI and Bollinger Band signals. When the RSI dips below 35, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands, it signals a potential buying opportunity. In this case, enter a long position at $1.46, set a stop loss at $1.36, and target $1.54. This combined approach leverages both momentum and volatility indicators for a more robust investment approach. The recent forecast data suggests a continued upward trajectory, further supporting this long position. Based on the historical data and forecast, Pepe shows a slightly decreasing trend, with prices fluctuating within a narrow range. The RSI consistently remains between 31 and 49, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting decreasing volatility. Given the current conditions, I propose a cautious, short-term strategy focused on capitalizing on minor price fluctuations. I recommend a long position when the price touches the support level of $0.000101. Set a stop loss at $0.000098 to limit potential losses. Aim for a target price of $0.000111, aligning with the resistance level. To refine the strategy, we incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, indicating an oversold condition, and the price approaches the support level of $0.000101, enter a long position. Place a stop-loss order at $0.000098 below the support level. If the price breaks above the upper Bollinger Band of $0.000131, consider taking profit at $0.000111, near the resistance level. This combined approach balances risk and reward, capitalizing on short-term momentum while protecting against significant downside risk. The forecast data suggests a stable price around $0.000096 to $0.000098, further supporting the long entry at the support level. Based on the historical data and forecast, Optimism demonstrates a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 level, indicating neither strong overbought nor oversold conditions. However, the recent spike to 52.7 suggests a potential short-term upward momentum. Considering the support price of $0.59 and the resistance of $0.714, a breakout above the resistance could signal a significant rally. The Bollinger Bands also show a narrowing trend, which often precedes a substantial price movement. Therefore, I recommend a long position with an entry price of $0.554, a stop loss at $0.52, and a target price of $0.608. To maximize returns, I suggest a tiered approach. Initially, enter the long position at $0.554 with a stop loss at $0.52. If the price reaches the target of $0.608, consider taking partial profits while maintaining a smaller position with a raised stop loss to protect gains. If the price continues to rise and breaks above the $0.714 resistance, adjust the target price to $0.75. This strategy combines RSI and Bollinger Band signals with support and resistance levels to navigate the volatility and capitalize on potential upward movements. The tiered approach allows for flexibility and risk management, ensuring consistent profits while mitigating potential losses. Based on the historical data and forecast, EIGEN Eigenlayer shows a fluctuating trend with support at $1.18 and resistance at $1.38. The RSI indicates periods of oversold and overbought conditions, with recent values hovering around 40. The Bollinger Bands suggest volatility, with the price frequently touching the lower band. Given the forecast for the next week, starting at $1.1, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 36, coinciding with the price touching the lower Bollinger Band. Specifically, enter a long position at $1.07 when the RSI is 35.7. Set a stop-loss order at $1.05, just below the lower Bollinger Band to limit potential losses. The initial target price is $1.12, aligning with the middle Bollinger Band and a reasonable profit expectation. If the price reaches $1.12, we can consider moving the stop-loss to break even at $1.07 to protect profits. Further, if the price continues to rise, a secondary target price of $1.22 can be set, coinciding with the previous resistance level. This strategy balances risk and reward, capitalizing on potential upward momentum while mitigating downside risk. Based on the historical data and forecast, PYTH network has been in a downtrend with periods of consolidation. The RSI consistently hovers near the oversold level, indicating potential for a bounce. However, the forecast prices suggest a slight downward pressure in the short term. The support price of $0.1 has held firm, and the resistance at $0.112 remains a challenge. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities. My strategy involves a series of short-term trades capitalizing on the RSI and Bollinger Bands. First, I will initiate a long position at $0.0963 when the forecast price starts on July 1, 2025. I will set a stop-loss at $0.0883, which is the bottom of the Bollinger Bands on June 28, 2025, to protect against further downside. The target price will be $0.102, aligning with the forecast price on July 6, 2025. This strategy aims to capture a quick profit from a potential short-term rebound, with risk management implemented through a well-defined stop-loss. If the price breaks through $0.102, I will reevaluate the market conditions and adjust the strategy accordingly, potentially setting a new target price or considering a short position if the trend reverses. Based on the historical data and forecast, Ether.fi has shown volatility with a recent downward trend. The support price consistently remains around $1.01, while the resistance fluctuates. The RSI has been largely below 50, indicating a generally weak momentum. Considering the forecast, the price is expected to fluctuate around $0.95 to $1.0. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. My strategy will focus on capitalizing on short-term fluctuations around the support level, utilizing a combination of RSI and Bollinger Band signals. My recommended strategy is a combination of three approaches. First, when the RSI falls below 30, indicating an oversold condition, enter a long position at $0.95. Set a stop-loss at $0.88 to protect against further downside risk. Target a price of $1.08, aligning with the upper Bollinger Band and the previous resistance levels. Second, when the price touches the lower Bollinger Band, enter a long position at $0.94. Set a stop-loss at $0.87 and target $1.03. Third, when the RSI reaches 70, indicating an overbought condition, enter a short position at $1.04. Set a stop-loss at $1.1 and target $0.97. This diversified approach aims to maximize returns by exploiting both overbought and oversold conditions, while the stop-loss orders mitigate potential losses. Based on the historical data and forecast, Arbitrum has been experiencing a downtrend with increased volatility. The RSI consistently remained below 80, indicating no overbought conditions, but recently moved above 50, suggesting a potential shift in momentum. The Bollinger Bands have been widening, reflecting this increased volatility. Considering the support price of $0.323 and the forecast prices, I recommend a long position strategy. We will enter a long position when the RSI crosses above 40. The entry price will be $0.308. To mitigate risk, the stop-loss will be set just below the support level at $0.299. The initial target price will be the resistance level of $0.391, aiming for a significant gain. To refine this strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it signals an oversold condition, reinforcing our long position. If the price breaks above the upper band, it indicates a potential for further upside. Therefore, if the price reaches $0.324, we will move the stop loss to the center of the Bollinger Bands, which is $0.334. If the price reaches $0.391, we will set a second target price at $0.4. This combined RSI and Bollinger Band strategy aims to capitalize on the potential upward momentum while effectively managing risk through dynamic stop-loss adjustments.